Now for more on Tiffany & Co.'s earnings and its business strategy, let's bring in Dana Telsey. Dana is the CEO and Chief Research Officer at Telsey Advisory Group. Welcome to the show.
Thank you for having me.
Now, Dana, what's your take on Tiffany's latest earnings results?
I think the earnings results in the second quarter, frankly, were pretty much in line with expectations, a touch better than may have been expected. The fact that the same-store sales in the Americas were better than what the consensus was looking for is encouraging. And really, it's all about the build-up to the fourth quarter. With new products on the way, with a new CEO joining in early October, the company is working, as you mentioned earlier, to increase their share of business with millennials.
So we're certainly seeing a lot of movement from the company. So which regions saw the fastest and the slowest growth?
I think you saw some improvement certainly in the Americas. It was still down, but not down as much as had been expected. Asia Pacific was weaker than expected. Certainly Hong Kong continues to be sluggish, and Macau was also weak. And Europe overall, they had some areas in the continent that performed, but yes, you had difficult comparisons with Brexit from last year.
Now, it seems like we've been hearing nothing but bad news for retailers. So what is Tiffany doing to really remain an investor favorite when some of these other retailers and brick and mortar stores have been really shaken up by e-commerce?
I think one of the things that you see with Tiffany, luxury goods brands overall are a little bit differentiated from the rest of retail. Typically, luxury brands are not marked down, it's not promotional, and you certainly see that with Tiffany. They're not over-distributed, and you have a more limited number of stores. And the other thing is you have a wide customer base because there's global awareness. And that's what you have with Tiffany. And the new thing with Tiffany is an acceleration in new product introductions. We're going to be watching for that in the balance of the year and into 2018.
Now, some items like diamonds are so expensive and unique that people might not want to risk purchasing something so expensive online. Is there a correlation between how expensive an item is and whether people are willing to buy it online? And does that help brands like Tiffany's?
I think overall you're seeing consumers today of all different income levels be comfortable buying different price points online. What you can say for Tiffany is its heritage, its authenticity, its brand reputation almost allow it to be able to sell more expensive goods online. And you see that with other luxury goods players too. But nothing replaces the service elements of going into a store.
Now, Tiffany's is one of those very traditional elite luxury brands, but how attractive are they to millennial buyers, especially as consumer tastes change?
Well, that's what's happening. You're seeing Tiffany begin to reinvent itself, whether it's with younger advertising, whether it's what they're doing with more frequent product introductions that's coming up. They're working to capture that next generation. Their online website has also undergone change in order to attract that consumer.
Now, is there any danger that they'll change too much of what people love about the original brand, and could that potentially pose a challenge?
I don't think you're seeing that. You're continuing to see the classic items that Tiffany has while introducing newer items. The heritage pieces that Tiffany is known for, those don't go out of style. They get passed down from generation to generation, and there's a long-term appeal of them.
Now, in Tiffany & Co.'s legal battle with Costco, explain to us how the use of the Tiffany name ended up being a very expensive branding lesson for Costco.
I think Costco is using that name as the Tiffany diamond setting. And certainly the name that Tiffany has when it's associated with wedding rings, when it's associated with diamonds, that is one and only Tiffany. You see many luxury players work to maintain their authenticity and keep their brand known to themselves.
Well, thank you so much for your insights, Dana Telsey, CEO and Chief Research Officer at the Telsey Advisory Group.